This is Jim Emter, Van Ahn & Company, Alexandria, Minnesota, with the closing grain and livestock comments for September 3rd, 2015. Corn market today, Dees corn down 6, 361.5. November soybeans down 4.5, 869.5. Meal market October down 210, 310 on the close. December, Chicago wheat down 13 3/4, 465 1/4. Dees Minneapolis wheat down 8 at $5 1/4, and December Kansas City wheat down 7, 467 3/4. Looking through some of the details today, downside seems to be the path of least resistance yet. Outside markets were a bit more choppy, but as we look towards a long-term track, we tend to make what are called dartboard forecasts at the beginning of January for what we expect for the year, and some of those harvest lows that we had were around 327 in the corn market, and in the soybean market we're to the tune of the mid-low 8s, 847 into that range there. As we look to the details here of where we're trading right now, we've got a corn market that we've kind of been talking about a 350 support level, a bean market around that 845 to 855 area. And when we look at some of those non-emotional forecasts we made at the beginning of the year, I feel we're within that 20 to 40 cents of a low in soybeans and around that 15 or 20 cents or so low in corn, where we'll get to harvest, we'll get the low, we'll review coming out of there, and then I think a lot of the details beyond there will depend on South American weather. So this is a cleanse. We're going to go down. There's a seasonal pattern here for the next 3 weeks to be a bit weaker. On average, over the last 5 to 6 years, we've averaged about 40 cents lower during the month of September, but 4 out of the last 6 years during the month of October, we've rallied about 55 cents on average when you take those rallies and take the 2 down years out of consideration. The 2 down years that we had, you were down 3/4 cent, and in the, I believe it was 2012, and in 2013, you were down about 13 cents. So, take that into consideration that October, the crop insurance derivative month, tends to be a bit higher, which is somewhat strategic in how they choose that. So when you look at the details here, be a little attentive to the downside yet for the next 2-3 weeks. September 11th, a major report. Informa out today reiterating a 168.8 that USDA is forecasting. That's nearly a 3 bushel increase from them, but they're trying to pin what they believe USDA will do, and their soybean yield at 47 from Informa, and we'll see where that kind of translates through the details here. Very much reflecting what USDA has anticipated, and so for them they're saying no change from USDA, but again they're looking for a little bit of downtick here over the long haul as well in reductions in harvested acres. Looking at the feeder cattle market today, up 75, 197.05 on the October feeders. Live cattle up 40, 140, 162.5. October hogs down 30, 69, 47.5. Seems to be more of a choppy tone. The outside markets, Dow was firmer for much of the day, and that kept the cattle, feeders, and lives both higher. As the stock market faded back down, those also got weaker. So be attentive to those outsides. And hogs for now, choppy range. We've been continuing to talk about that range-bound trade, and we continue to reiterate it more or less on a daily basis. This has been Jim Emter, Van Ahn & Company, Alexandria, Minnesota. Trading in futures and options involves risk of loss and is not suitable for all producers. Past performance is not indicative of future results.